it all depends on what you're trying to accomplish, and how you think philosophically about it. So, risk management is very important. There's just no doubt about that. But for me, these quantum losses are, no, I haven't doubled down on virtually anything other than Sarepta. Immune, there was no double down. That was just a huge win. Abivax, no double down. That was a momentum buy. I bought after it went up 300% and it went up more. So watch your mouth. If you don't know, don't talk. Kohl's as well. I top tick Kohl's. That was a huge trade. I don't know if anybody caught that. IonQ, I've been able to nimbly trade that. The other day it was up on earnings and I was able to, it was up on the Amazon thing. Yeah, that's Sarepta. I've been doubling down, but what the funny thing about Sarepta is it went up 60% and I sold it. So I don't know if you were there for that. You're not here every day. You just see one trade and you flip out. It bugs your mind. But I've never had more than 10% of my portfolio on Sarepta. So I don't know what you're crying about. Yeah, you want to see trade by trade on Sarepta? Is that what you want to see? I think you're just mad. Look, I'm not saying I didn't get lucky. But let me show you the trade by trade on Sarepta since you seem to be mad. I don't know why you're mad. It's just trading, dude. But yeah, just because you are so mad, let me help you out. Really give you a sense for how master does it, all right? This is just Sarepta, just so you can see it. First time I ever traded Sarepta, I opened the account on 4/8, okay? First trade. Actually, I could just paste this. So first trade was on 4/8. Remember, the account was opened on like 4/1, and I think it was like one of my first trades. So I bought 5 shares, 5 at 41.22. All right, just so you understand how much that is. That's $206 on a $30,000 portfolio. Okay. This is like a teaser position. That is a 69 basis point position. Okay. Well, I'm down on quantum and I'm okay to be down on quantum. It's not that big a deal. My portfolio's up 30. Do I wish I was, long quantum? I'd be up 100%? Sure. But, no hedge fund in the world thinks that they can be right on every trade. Like I said, I don't just double down. I buy momentum too. But now you want me to switch? Do you want me to stop showing you Sarepta? You keep switching, right? You keep switching. You got to slow down. I have to own you one piece at a time. A week later, I doubled my position at 31.64. Wow. Huge double down. Oh my God. I must be in such a crazy size, right? Oh my God. How could I possibly have this much size? At this point, I have 10 shares. Okay. The market price is 31. I have a 1% position. How risky, how crazy, how diabolical. This guy's swinging for the fences. A whole 1% position. Whoa, he's doubling down like crazy. What a maniac. He's totally not prudent. Okay. You can double down. I mean, that's not something that people don't do. Warren Buffett doubles down. It's not like impossible to double down. Tiger doubled down. You wouldn't know this because you worked at Sheffield Asset Management, some microcap hedge fund. But you can double down in investing. It's not, I don't know who taught you, but it is possible to do. You don't have to only, you can maybe you heard dollar cost average. You can buy something slowly. It's not one way to trade. There's lots of different ways to trade. A lot of value investors who like to bottom fish like this. It's normal. So Sarepta is extremely volatile. Bought another lot here. Okay, now up to 30 shares. Now it's a real position. I'm at 4%. Okay, 4% of my portfolio. 4%. Yeah, whatever, Teddy. I give the people what they want. People wanted a small portfolio so they could identify with it. Okay, next day, again, I bought more Sarepta. This is called building a position, something Sheffield has never had to do because it doesn't have any capital under management. You've never worked at $1 billion fund. You never had to build a position over time. So here now I have 40 shares. So the most size so far I had in Sarepta was 4%. The most so far. I mean, I'm not done yet, but the most I had was 4%. I don't follow the farmer trades. I only follow his bad trades. I don't follow the money makers. I only look at one half of the distribution. Now I know why you're a failure in Wall Street, and I use my judgment. I'm not a new trader. I've been doing this a long time. You know, I taught a lot of people how to do this. Doubling down, I say it all the time, is the worst thing you could do in trading. But this was a unique situation. This stock had an unprecedented situation in biotech. So I kept buying. And again, still a 3% position here, nothing too crazy. Now I go ham. The stock, this is kind of interesting. I think this is around the time they said that, what happened on 6.3? Something happened that made me go buy a ton. So now I have 100. I'm at a 9.65% position. I always say don't buy more than that. That's a lot. 10% position. So that's a significant position. Until now, I've been patient, careful, but now I'm starting to go ham because the stock is having this unprecedented situation. There's a crisis. Well, look, it's one of these things where you have to decide, are you going to stick with it or are you going to capitulate? And most of the time, you capitulate. But for me, I understand the situation. I knew that's my edge. I knew that a little bit more pain would be worth it. And I was right. So okay, let's see. So now I'm at 140. The position has dropped, right? I only have 7% now. I never crossed 10%. Notice that. Never crossed 10% yet. I will in a second. But so far, still haven't crossed 10%. Just patiently buying. Nothing wrong with that. If you really have conviction. I think I'm buying at 2 times earnings. I'm brave or stupid, depending on what the outcome is going to be. Bought even more stock, same day. At, let's see, make sure I have the numbers right here. 200, yeah. At 200 shares, massive position now. 11% position. Going, not all in, but pretty big. Now, the company has a lot of cash. The company's got a lot of, whatever. I mean, this is value investing. There's lots of firms that do this. I didn't invent this. So now I have a 12% position, buying as it drops. I'm not the first guy to buy a stock as it's dropped, and it won't be the last. It's not that unique. Okay, so I've been taking pain. Where are my sales? Oh, this is trying to find my sales, but it's only showing me my buys. Okay, here we go. This might work. Ah, perfect. This is sorted by date. Okay, it's like reverse chronological. Perfect. I found the place where it's all. So 5, 10. Yeah, there's different styles of trading. Some people think when a stock's going down, they should be getting out. Some people think when a stock's going down, they think it's more attractive, and you just have to know the difference. So both can be right, but there's no reason to cry. I mean, crying is unacceptable. Okay, so total position. Yeah, I mean, I think the reason most people get scared or nervous about buying and doubling down, and it's a pretty good, it's a good framework and a good rubric, is that you're probably wrong on the stock. Like if you were constantly buying over and over again, it is generally a new mistake, because people who do that, they're usually just like desperately trying to be right, and they're not actually thinking about the chance that their investment is impaired. And that doesn't mean that every time you do that, that's what you're doing. It's like saying, oh, every time I cross the street, I'm risking getting run over. And the one time you got run over, it's, you shouldn't have crossed the street. It's really not, you can't causally follow. But in general, I do think the people that double down arbitrarily, it is almost always a big mistake. And I've said that many times here. Yeah, don't get married to the stock. Don't double down. Doubling down is basically, if you just eliminated doubling down from 90%, doubling down from 90% of investors, it would greatly increase their P&L. But again, you have to know when to hold them and when to fold them. It's the old song. It's not always, there's no real rule in the market. Some people feel like that's a rule, but again, certain traders have different perspectives. That Warren Buffett would say the exact opposite. And arguably he's the greatest investor of all time. So, all right. So here's a 17% position. So pretty huge position, a little outlandish even. And then we have another that, that's basically was going to be my Custard's last stand. And, we had a huge drop in there a month later. And I decided to buy another bunch of stock. So let's see how that looked. So max position here was actually 17. I don't know what numbers I was looking at earlier. That's that. And then we basically went hog wild on 616 and we traded it. So we bought and sold and bought and sold, and we ended up, let's see where we ended up. 2195 minus 2008. I'm just going to put this as P&L on the side. 2194 minus 2008. So we added a couple percent there in P&L by trading it. And then 218525 minus 20.3. So here was just an extra almost 2% in P&L from the trades. But I'm just going to put down the net activity of that day was just 100 shares. So I bought 4 lots and sold 3. And then here's the crazy one. Well, actually, this isn't crazy. On 627, I got out of everything. So here's where I capitulated, I guess. So again, being accused of just doubling down. No, it didn't get cut in half. My average at this point is, again, I don't think you can do math very well. I don't know. You didn't go to IIT, I guess. But I took my losses down 10% on the position, 20% on the position. So in fact, I did exactly what you're criticizing me of not doing. I got out. And my average at the time, before I sold everything, was, it's not hard to calculate this. Yeah, I got out at 17. So yeah, 627, I'm out of the stock completely. I start building the position back up basically the next day, back to a long. And then I wish I had held it, because just a few days later, what happened? Just a few days later, the stock doubled. So I bought a 6% position back. A little annoying because 2 weeks later, the stock doubles. Goes from 17. And remember, I did clip a little bit here. So my losses were not that atrocious. Let's see what they were. 240 this minus this times 240. Pretty big loss, $3,211. That's roughly 10% of the portfolio. But taking out the trading gains is roughly 9% of the portfolio. For attribution, it's certainly, for your worst mistake, that's not too bad. Losing 9% of your money. Okay, so here, though, I make this amazing trade where I basically make almost all of that back in one trade. So now my attribution is down 3% on that position. So the worst I ever lost for my account was 9%, which, is certainly not good, but just a weeks later, it'd only be 3%. And now I kept buying. So I sold it at 28.85 just by some miracle. I'm sure you guys remember that conference call. And I was just like, all right, I'll sell. And then, that was good luck, but I would have bad luck again because I bought it and then didn't sell again. And now you can see, you only want to see the losses. I know. I wish I could just give you loss porn, but unfortunately, sometimes I do make money. And now, I basically rebuilt the position, and it's still a very big position for me. But you can see the average is around 1350, and I was able to buy the stock at $10, 10.55. Did it trade that low, chat? That seems impossible because it's 18 right now. Man, I would be hating me too if I were you. I'd be hating me too if I bought a stock 2 weeks ago at 10 and now it's 18. Yeah, I'd be a hater. I'd be a hater too. Why you getting money? I want to get money. Why you getting money? Yeah, I'd be a hater too, baby. Yeah, so there's my position, 14%. So I have a 14% position. I still like the stock, but honestly, doing this analysis, I might have to trim some, man. It's at 18. I got it at 10.55. Sorry, you didn't get it at 10.55, dog. The biggest position I had ever was 17%. Admittedly, it's concentrated. It's concentrated. I think that if you think that doubling down is new behavior, you got to talk to Warren Buffett, dog. You got to look at that American Express trade. Let's watch what happened with the Amex trade, just because you need a history lesson, man. This is the same exact trade. Salad oil crisis.
American Express.
Let me help you out.
Interesting case study.
In 1964, Warren Buffett went all in on a failing credit card company that almost went bankrupt because of salad oil. So Wall Street was saying it was over, but everyday people still trusted and weren't affected by the incident. So Buffett decided to invest $20 million into Amex after one of the biggest scandals in Wall Street history. That bet turned into $20 billion. That is a 100,000% return. The scandal made everyone panic, but not Buffett, making his bet on American Express one of his best of all time. And
you don't have to always... when a crisis hits a company, you don't have to always, you can buy. It all depends on what you think's changed. There's a set of conditions that would make me sell all my sarepta. Look at that. Lovely, huh? Yeah, I mean, I haven't touched UNH. And there's stocks that have dropped that I've just left. And yeah, I doubled down on Quantum. Quantum's the biggest disaster in history. Do you think Chanos covered his Enron because Enron went up? This guy's something else. You got to go get a job at Millennium, man. You need a job at Millennium. They'll stop you out down 50 bips. That's what you need. I guess the mental block here is you think everybody should trade like you. Yeah, I don't agree with all of Chanos'. I don't see why you would short Carvana, for example, but shorting requires deep ability to stay in a trade. Take a lot of pain, unless you want to be Millennium. And there's nothing wrong with Millennium. They're the biggest hedge fund, but not everyone does everything the same way. You don't just... Again, if you read the book, there's a book where Steinhardt said he doesn't use stop losses. Steinhardt's considered one of the best traders of all time. I guess so, Aditya. I mean, you gotta, I guess, stay tuned. So if you're right, then, I'll be down 99% one of these days on YouTube and you can say, hey, you're right. So stay tuned, I guess. I mean, what you think is a 50-50. I mean, what do you know about pharma? You said you're a mortgage guy. sarepta made $200 million cash flow this quarter. I mean, I don't think he's wrong about some of what he's saying, but I think that you have to know when to break the rules. Buffett broke the rules with American Express. Remember, Buffett had a hedge fund where oftentimes he would have 3 stocks, 5 stocks, and he'd be all in on some of them. And he would buy them as they went lower. He said, it goes lower, I'm buying it for cheaper. He said the only place where people don't like a sale is the stock market. People have a sale on shirts or hamburgers, they buy more. In the stock market, they get scared. So there's so many different philosophies, and none of them are right or wrong, right? This kind of, and Buffett's shorted before. It's kind of like, you could dismissively call it martingale. You could also say double down, but you could also say it's Buffett. It's real investing, where, you're basically, willing to say you have, some true value X that you believe in, and that you're just looking for some delta, from that value, and you don't know what the market price is. You're hoping that you're trying to maximize this, and this is something that's very weird to some of these other schools of thought. So that's one school. Across the street, there's a different school. And this is, say, Pod Shop, Millennium, 0.72. Oh, by the way, there's no stop loss ever here, right? And, this could also be TCI. Imagine TCI having a stop loss. Baker Brothers. So as you'll see, Pershing Square, all the people, here's 4 funds that employ the strat and made a fortune, right? When you're sure, you're sure. And there's plenty of examples where you can find that people lost money with the strategy. It's all about how you employ it. There's no strategy that's going to guarantee you profits. So I can point you to plenty of losers that did this. For example, here's a good one, is Bill Wang. All right. Aditya mentioned my first hedge fund. I'll put the name there. It's not like this is a strategy for success. There's guys who do it right in green and guys who did it wrong in red. And that's kind of the nature of the beast. So I don't know who else here just did the double down forever, but you know, it's obviously not a strategy that wins all time. Yeah, I was long AVII. Yeah. Okay, so here's the pod shop strategy. Cut losses immediately, basically. It's stop loss driven investing. LTCM actually made money for clients, interestingly. And obviously, look, these firms have done well. Millennium, Point72, Citadel, but there's plenty of funds that did not do well doing this. I should not name them because I don't want to be mean, but there's a bunch of hedge funds that maybe didn't do that great, that tried to start pod shops. Yeah, sometimes it's not a thesis breaking exit. That's why for American Express, you double down. That's why for sarepta, I double down. That's why I'm up. And you're crying. I don't know why you're crying. It's a little weird. And your tears taste a little bit like curry, but at the end of the day. So anyway, there's a lot of pod shops that failed, most prop desks, almost all prop desks basically. And so you can do this well as well. So there's not like, you know, some magic trick. I mean, again, you got these guys that did great, these guys that did poorly with this strat, these guys that did great, these guys that did poorly with this strat. These are basically the main two strats. I mean, there's others, but you know, quant is a little different. You know, quant is like, there's no concept of a stop loss really in quant either. It's just trade like a banshee. No risk because positions are 10 basis points and you have thousands of them. That's one quant strategy. It's not all quant strategies. There are quant strategies that do have a lot of risk. So look, you can make money in this school or that school. You can lose money in any of these schools too. There's no easy win or loss. You know, there's InfoArb guys. I could draw this for days. There's Tiger Cubs that made a fortune. There's Tiger Cubs that lost a fortune. There's value guys that made a fortune. There's value guys that lost a fortune. There's short only guys that made a fortune. There's short only guys that lost a fortune. There's long only guys that made a fortune. There's long only guys that lost a fortune. There's day traders that made a fortune, lost a fortune. I mean, it's really, there's no one rule. I think that's the most important thing to know. Do most traders double down on stocks? No. Have some? Yes. Steinhardt used to do it. If you don't think your thesis is wrong, you can keep going. Tiger was constantly in that ballpark. And you take after where you worked, right? I mean, when I worked for Cramer, he would get out of stocks if they were punishing him, but not always. Haters looking to hate, man. I feel bad for you guys. 4502 is Takeda, Japan's, actually, I'm not sure they're their biggest pharma company now. It was Japan's biggest pharma. There's no need to cry about another man's, you know, activity. You know, there's unbecoming. You don't need to be upset. The problem with value investing is you're wrong and you're wrong and you're wrong and you're wrong, and then you're proven right. The problem with trading is you're never right, but you're trying to make a P&L anyway. So it's tough. There's no, every person thinks they have a better mousetrap than the next guy. No, I follow Japanese stocks. The curry tears are flowing. Is it because you're up 3% this year? I don't do stop losses, no. I'm not saying they're bad, by the way. I just use my judgment. I mean, is my thesis changing? Is my thesis wrong? I probably do want to. Yeah, I would send my cats to Haiti if ATIRE worked. I mean, I will personally stop a trade out. I'm usually watching my portfolio, and there's nothing really that risky or dangerous. I think I'm going to keep the cats, but wifey was sneezing like crazy earlier. Not really, Kulkarni. Everyone's a little different. I don't know why you have trouble with math and selective memory. The biggest my position ever got was 17%. I didn't double down on a 25% position. That would make me have a 50% position. Stop lying. I will end your career, dude. Don't lie. I'll make 3 phone calls. Your career's over. I've done it many times. Don't make me do that. Now it's not funny. I've been nice enough to you. I've been humoring you long enough. I'm your OG and you will regard me as such.